Good morning. And there's the opening bell. Welcome to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I just heard my trade alert go off, so something's changed here this morning. Welcome to all of you, whether you're here for the first time or for the 100th time. We're glad to have you here with us. I'm joined out there in the chat by my good friend Brent Morris, 30 plus year veteran of the financial markets and a great resource. He's going to be there to help answer your questions along the way. Keep that conversation going, whether you're here in the live version or the recorded version. Leave us a question, leave us a comment, and we will incorporate that into the discussion as best we can. Now, I'm reminded this morning, before we even get into some of the housekeeping items, and I've been watching the discussion going on here in the chat, I'm reminded of two things. The first comes from Captain Jack Sparrow. Why is all the rum gone? First of all. Second, I'm reminded of National Lampoon's Christmas Vacation. Why is the carpet wet, Todd? I don't know, Margot. We're going to take a look at what's going on this morning because the question that somebody asked is, why is everything down? We're going to take a look and see what that looks like here this morning and see what some of those scenarios are. But a couple of quick housekeeping items as we just get into this discussion. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not any kind of a recommendation or advice or specific solicitation of a particular security or account type or anything else. Remember that futures accounts aren't protected by the SIPC. Make sure that you understand the characteristics and risks of futures trades. Make sure that you understand that futures trading requires separate trading authorization. It is not suitable for all investors. It carries with it substantial risk. So be aware of that. Also remember that futures margin, also known as a performance bond, is the amount of money that's required to be deposited in your futures account in order to initiate a futures position. We'll talk a little bit about that as we get into this discussion. But remember that investing involves risk, including the loss of principal, and for some products and strategies like futures contracts, loss of more than your initial investment. Stop orders in futures contracts behave a little bit differently than they do in equities. Stop orders aren't guaranteed in execution due to exchange rules based on certain conditions, and we've had some of those types of markets certainly in the last day or so. The exchange may reject or substitute an exchange designated limit order for an originally triggered market order. So any market order that says fill at this next available price may get rejected or may not fill if price moves in a fast-moving market around that protection band or protection range. Whoops, I went one too far. There we go. We're going to talk perhaps a little bit about virtual currency derivatives. Remember that they involve unique and significant risks. Read the NFA Investor Advisory and the CFTC Customer Advisory on those products. And you were with me in the cryptocurrency webcast yesterday along with Jim Ferrioli. We talked a little bit about cryptocurrency futures as one of the ways that investors can gain exposure. Be aware of the risks associated with that. Also, we're going to be using the Thinkorswim desktop software platform, specifically the Paper Money platform. It is not a guarantee of future success, but it's a great learning environment. Make sure that though you are aware as you move your practice from paper trading to live trading that some things do change. One of the biggest changes, especially when you talk about futures, is where orders get filled. In paper money, those orders will get filled typically at the midpoint. In a live trading environment, they get filled based on market forces. Past performance, no guarantee of future results. So let's jump out here to the Thinkorswim desktop software platform, see what's going on. I'll tell you what, looks like the parties are, Gary says this, and I get it, because we look at a day like today, we get a big red candle in the S&P 500, for instance. That's what we're looking here, the /ES. But we were starting to see signs of that earlier. It wasn't like this was a new scenario. Starting to see that in the NASDAQ, and I think this is where it's maybe coming home to roost a little bit more. Obviously, the tech sector perhaps taking the brunt of this move to the downside, but a little bit less impact in the Russell 2000 and the small caps. So one of the concerns, and let's kind of answer the question, why is all the run gone? One of the reasons for that is there was perhaps, if you want to think about how it cascades, you look at some of the individual stocks. So you look at something like GOOGL, Google, that was down yesterday. Some of their AI talent departed, not AI individual, but people that were working on AI departed the company. That kind of triggered a knee-jerk reaction in Asian semiconductor markets. The South Korean Kospi index down nearly 10% on some of those tech names. So we look at some of the individual stocks. Micron down this morning on this move, down 11% in this move. And earnings coming tomorrow, as a matter of fact, in Micron. That's going to be one of the things that this sector is going to be looking at. Now, why does that matter to the futures markets? Because when we take a look at /NQ like we were before, we're seeing the big hit coming here in NQ as this kind of rolls into the US markets out of those European and Asian markets overnight. So that's where we're starting to see some of that impact. If we take a look at /VX and VIX futures, VIX futures up on the day, or at least on the session so far, about 6%. Rising RSI, VIX futures were staying relatively elevated over the last few days anyway, relative to where they were last week. So still staying kind of at a base around that 18 handle. Nevertheless, only up into the 19 handle so far. Now, that being said, the market, the cash market hasn't opened up yet. Well, it has. I'm sorry, it has. We've been up for 6 minutes. I'm ahead of myself here a little bit. But taking a look at VIX, the index, up into the mid 20 handle. So the futures contracts lagging a little bit behind, seeing where the VIX futures are a little bit below where the index itself is. And that arbitrage typically tends to resolve itself fairly quickly. So VIX up, market down, normal relationship is kind of coming into play. A couple of other areas really quickly for us. SCL, crude oil breaking in the futures contract, crude oil breaking the 200 period moving average in this trading session. If it closes below that, the last time we had a close below the 200 was back in January in terms of the crude oil contract. So that move to the downside continuing, it's really kind of come to the completion, if you will, of that symmetrical triangle that was in place. So crude oil kind of finishing that bleed out here of that price down into that 72.99 a barrel range. If we take a look at /RB really quickly here, gasoline moving to the downside, some demand destruction there, coming off of those highs around that 3.8 level. If we take a look at heating oil, one of the proxies that we've looked at quite a bit, breaking below kind of this support area. I wanted to look at two other areas, and we're going to look at some individual moves that are going on. /GC, gold, overall down a little bit today, almost 1.5% or 1.5%, a little more than 1.5% at the moment. Gold down, /SI, silver down. Silver, the more useful metal when it comes to that semiconductor space. And so not only are we getting the precious metal bleed off, we're also getting kind of the semiconductor sell-off bleeding back into silver as a useful metal. So silver down 5% in the move today. And that's also bleeding over into /AHG, which is copper futures. Copper futures breaking below the 50 period moving average on this big red candle, though not the biggest red candle that we've seen in the last 2 months or so. We've seen some pretty substantial moves. We could perhaps, and my good friend Rachel Deschelle would probably be yelling at me if I didn't mention this, that we've got a bit of a triple top here with a pretty strong bearish divergence on copper, with that potential move to the downside here, and not breaking that level yet, but we might look at that as a potential for some downside movement in copper if the sell-off. Because remember, copper is tied to the whole. I mean, it goes, what goes around comes around, right? And it's tied to the whole scenario of if semiconductors slow, if the AI spend slows, then energy spend slows, energy infrastructure spend slows, copper spend slows as well, and then that translates then into that housing and other industrial demand for copper. So some weakness in the semiconductors. This is kind of that butterfly effect, right? Weakness in an Asian index that's tied heavily to the South Korean semiconductor space flaps its wings, and we start to see copper futures making a move to the downside here in the US. So that's kind of the interconnected nature of what we have going on. So I had earlier this morning, let me pop into here my futures grid. For those of you that are brand new to this webcast, one of the things that I use on an ongoing basis is this futures grid, and it's a side-by-side chart um, of yeah, side-by-side chart of a one-year daily chart on the left-hand side and a today 1 day 5 minute chart on the right-hand side. And Brent, thank you for pointing out that it's not everybody. There is still some breadth in the S&P 500. It is concentrated, at least at the moment, to the um, technology sector, but it's not necessarily spreading to some of the others. We see some of the software spaces. Somebody pointed out IBM moving higher a little bit here this morning as well. But this is again where we think globally, and maybe we start to think about acting locally as we get down into some of these shorter term charts, because as crude oil and copper, heating oil and so forth starting to move to the downside, the shorter term timeframes are maybe presenting a little bit different picture. The damage may already be done in terms of this move. Again, not knowing that, not predicting the future, simply taking what is happening. So this double-sided chart that we have, again, I've put it in the description for this particular webcast. But what I'm going to do is I'm going to share this with you as well, so that you've got this grid. And anytime we share anything, remember, it's not guaranteed as to time or accuracy. It is for illustrative and educational purposes only. So let's see if we can. Oh, wow. I'm not able to share out into the chat. So I will share that to Brent, and then I will let Brent share that grid for me, so that you've got it out there in the chat. Let me share that to Brent. There we go. All right, cool. All right, so let's take a look. A couple of things that I had put on earlier this morning was this /M2K. This was the small caps. And at least initially, they were starting to see that rotation into some of the small cap space. That was then kind of, I got kicked out. Wow. Okay, interesting. Let me make sure that that's still working. All right. I may not have chat, so I may not be able to see what you are chatting, but let me bring this up really quickly here. Okay. Interesting. I got kicked out of the chat. All right, let me just pop that up so I can at least see it. Thanks for your patience, guys. I appreciate that. I can at least see the chat. I may not be able to participate in the chat. So thank you. Just keep that chat going. Thanks, Brent, for being there. That's why Brent's there. And that's why our other coaches are there. Anyway, so we got kicked in to this /M2K reversal and kicked out as it failed. So let's pop over here and take a look at that /M2K. And this is what I was looking at. And it's gone on to do exactly what I was kind of thinking it was going to do. And that was one of the scenarios that I was looking for, was this bounce. So I'm going to go over to my right-hand side and see this move. We'll maximize this side and kind of take a look at what was going on. So we got one candle. This is maybe a testament to maybe not setting stops so tightly. But my expectation was a bounce along this diagonal trend line and a breakout. So I got into the trade. Let me kind of zoom back into this a little bit more. The entry to the trade was right here. Entry point was on this breakout right here, looking for that bounce off that diagonal trend line. My expectation was that it was going to make that short-term swing move right up there to that target, right around that 29.90 level. Yeah, Brent must have booted me out of the chat for sure. And I put a stop actually down here right at 29.70, which was a little bit below that diagonal uptrend line. Well, sure enough, just as we were getting started here this morning, we got a long tail candle, a big wide range candle that took me out on that stop. And then it proceeded to go on and do exactly what I had expected it to do, not predicting, but looking at what the expected move is from a technical analysis standpoint, went right back up to that target. And I obviously at that point was out of the trade and did not get to participate. But you kind of see what that trade was looking at here. Now, one of the things we could consider doing, if there is this rotation back into the Russell 2000, and this is the idea of, kind of getting back up on that horse, if you will, but is the idea of maybe looking for this breakout here and looking for another target somewhere up here a little bit. So let's see if we can find that. I'm going to clear those drawings. I'm going to zoom back out just a little bit here because I'm kind of zoomed in tightly on this chart. Let's zoom back out and let's see if there is a natural resistance level. So what I'm going to do is I'm going to take this distance right here. I'm going to right click. I'm going to duplicate that drawing and I'm going to put it right up here. And I'm going to see if there is a natural resistance area. And there is, to be fair. I'm actually going to extend that just a little bit. I'm going to go up to this resistance area right here. We'll call that 3010. And I'm going to put my stop right back down about where it was again. But we're going to do this as a buy stop in terms of this breakout. So 29.88 is going to be my buy stop area. So we're going to right click. We're going to create a buy custom with OCO bracket order here. And I'm going to have to change my labels a little bit. But 29.88 is going to be my buy stop entry point. We're going to say stop, wait, don't do anything until this breaks through that resistance level and it triggers this at 29.88. So we're currently sitting at 29.87. So I better get this done quickly so I don't talk through that potential entry. Target up here is at 30.10. So we're going to make that target to the upside 30.3010. And we're going to make that good till canceled. And we're going to make our stop right back down here again at 29. I'm going to make that 29.65. I'm going to go off the bottom of that long candle, 29.65 as my stop. That's where we got stopped out before, 29.65. And we're going to make that our stop again, but we've now moved a little bit higher from there. We're going to make that a market stop, but that's going to get substituted as an exchange designated limit order. So here we are above that 29.88. We're at 29.91 because I was talking, so we missed that initial entry. But this is a buy stop, so if we click on confirm and send, our initial margin for this trade, 1,181, which is one of the reasons why we're looking at the /M2K instead of the big contract. I'm going to put this in our futures group so that it goes right back there. We're going to look through that, make sure that it's what we want to do, make sure that this is to open. And by the way, let's do this. If you remember, I want to change this to close and to close just to make sure that that's got the order of operations in place. So I want this buy stop to enter the trade. I want a sell limit to close it and a sell stop to close it if it goes the opposite direction. So just a good reason to read your order one or two times. Now we're in. Now we're looking for that long move to the upside as maybe we see a little bit of rotation, and to Brent's point earlier, seeing some strength elsewhere in the S&P 500, not just in the /NQ. So let's take a look at, though, let's go back to our, side-by-side view. Let's go take a look at /MNQ, which is the NASDAQ Micro, and it's doing something fairly similar here. It's making that that move back to the upside. So as Carol points out, the NDX recovering a little bit, starting to see that move to the upside potentially. A little bit of a turnaround here. VIX at 1943. So VIX coming back down a little bit, but still some volatility. So I'm going to kind of look at this from a technical perspective. And again, sometimes it's helpful, I think, to be relatively agnostic when it comes to whatever the symbol is, and just look at it from a technical analysis perspective. But I'm going to pop over here to this cell and I'm going to say, look, we're getting a bit of a double bottom, maybe a triple bottom here. Once, twice, three times a bottom, right? But the ADX is kind of falling off and not really giving me, I mean, yes, technically we're above the 25 level on the ADX. And if I were to pop in a level here right about 25 on the ADX, that's kind of my trend strength gauge, if you will. In this particular case, I'm going to put that trend strength gauge right there, and starting to see that potentially gaining some strength here. It's kind of bouncing along that 25 level. If it stays there or starts to rise, that's going to be maybe an indication that this trend is gaining some strength. So I'll tell you what we may do here is look for that potential turnaround, in this short-term move. So what I'm going to do is I'm going to find this level of what is potentially resistance here. I'm going to call it 3310. Okay. So if we get that breakout, I'm going to do just like we did in the Russell 2000. Seeing that we see, yes, exactly, Lionel Richie, for sure, James. You got it. You got my reference. The things that go on in my brain, movie quotes and song lyrics, right? So we're going to right click and we're going to create this order. We're going to do a buy custom with OCO bracket. We're going to look at targeting that exit around the 3309 or 3310. We're going to get in on a buy stop above 29. I'm going to call it 29,910. We're going to go 29,910. We're going to go 29,910, 29,910. 0.0 is going to be our buy stop. We got to change that to a buy stop that says stop, wait, don't do anything until we get to that point. Then we're going to get out. We're going to look at taking an order to exit here at 3310. 30310. 30310. 0.00. And we're going to make that good till canceled. We're going to make our stop. I'm going to stop it if it goes below this 29,763 range. So I'm going to go 29,760 as our stop. 29,760. Remember, these are only initial levels. We'll potentially move this stop as that price continues to move to the upside if we start to get that movement. Leaving that stop level down there as opposed to moving it up above our entry price leaves our risk increasing as the price of the futures contract continues to move to the upside. So once again, I'm going to make those closing orders, to close, and we're going to click on confirm and send, and we're going to read through this. Buy one contract at a buy stop of 29,910. We're almost there, not quite yet. And then exit if it goes up to 33.10, and exit if it goes down to 29,760. Our initial margin to go long this position, 4,136. And there's no guarantee that this is going to continue to reverse and go to the upside. Remember, we kind of had that weakening trend strength here. So a trader could use something like a conditional order triggered by the ADX and a particular ADX level. ADX is starting to turn up. We're starting to get a little bit of a lower or a higher low in the ADX, starting to see some trend strength. But we're going to put this order together. I just want to label this so that we've got it in place and labeled so that it's easy to remember. That's going to be our entry into the trade. This is going to be our target for the trade. And that level right here is going to be our stop in the trade, just so that we can keep track of those in those particular. And you're right, with that early sell-off, Sam, this may feel it's kind of bouncing its head against that resistance, and it's not breaking through yet. So let's go ahead and we place that order. That's now sitting there as if we were to go over here to our gear icon, show orders, click on apply. There's our order relationship, kind of what we labeled as well. Yeah, so let's kind of talk about this really quick. If we pop over here to the previous chart, so here we go. For those of you that are brand new, this is just a really quick explanation of what we're looking at on this futures grid. For those of you that have been here before, good review. Shows tick size 0.25, tick value is 0.50, point value is $2, which gives us a notional value of 59,731. What that means is these two digits right here to the right of the decimal, those are our significant digits. That's what's giving us our tick increment, our tick value. Every time that moves from 0.5 to 0.25 to 0.75, that's 50 cents. Every time this number moves just to the left of the decimal, that's $2. So you take the $2, times that by the price of the contract, that gives you your notional value. So another way to think about this point value here is as if that's the delta of this contract. It's an approximation of that. So we just got in. It just popped us in. Let's see what it's doing. So it just kind of went up, triggered that order, and got us in. Now, for some traders, this is where, putting that order right at that level might be something that they would consider doing. Other traders would say, I want to see a little bit more, giving it 10 or 15 cents or whatever that increment might be, to really have that confidence that it's breaking out. Now, we got it right at that line. We're in at the moment, but it's not necessarily moving higher. It was just a quick move. So that's one of the things that that you might pay attention to as you're setting up this trade. Brent makes a good point. There is a publicly available watch list called Micro Futures. All you do is you go here to the Market Watch tab, go to quotes, go to public watch lists, and come on down here alphabetically to the one that says Micro Futures. That's what I've got here. I just sorted it actually this morning by these moves in terms of percentage change. So that's where I started to see silver really kind of getting hit early. So let's take a look at /SIL. Let's jump over here. Now, this is the big contract, right? I'm sorry. This is the micro, excuse me, because it doesn't have an M in front of it. Sometimes gets confused. But this is the micro contract, and there are smaller contracts as well. But notice also starting to see maybe that little bit of a turnaround here. If we draw our line, something very similar to what we were looking at in terms of the semis, the NASDAQ, and the small caps. But if we take a look at /SIL, we go to the futures drop down here, we can see that our tick value is 0.005, tick size $5, initial margin still relatively high. remember if you did before Christmas time, before the holidays and last year, that silver futures, especially the micro contracts, these margin rates, initial long and initial short margins, expanded significantly. In fact, over the course of about 3 weeks of teaching this particular webcast, we saw the futures margin, that initial margin on the silver contract, to go from about $2,500 up to about 15,000 at one point. It's now starting to back down as that volatility has decreased. But you can still see that it's staying somewhat persistent as well. Now, there's another choice. There's the 100-ounce contract. In terms of that behavior, it's going to behave exactly the same way. It works with its own forces because it's a separate contract, but it's going to track silver spot prices, just like /SI, /SIC, and /SIL. You just see the corresponding differences in terms of the margins. Koala asks a question. Could I have used ATR on the daily to set the exits on up and down entries? Yeah, absolutely. We did that in the swing trading class a couple of days ago, or last week, I think, in terms of using an ATR multiplier to set stops and targets in that type of trade. But that's certainly something that could be done as well. I just want to look really quick, /MCL. Let's see what crude oil is doing. Crude oil is really just kind of hanging in there right around that 73. Not a lot of movement, not seeing a lot of trend strength one way or the other. But I wanted to look at /MHG. This is the micro copper futures, kind of sitting back on that level and really kind of cruising sideways here. The other one that we talked about was /MBT, and that was Bitcoin. And Bitcoin kind of seeing a little bit of a bounce here. If we look at the longer term chart, kind of bouncing underneath this resistance level. RSI starting to pick up a little bit, gaining a little bit of momentum, not huge yet. But boy, I'll tell you what, if you look at these futures contracts in the last few hours here, a lot of these contracts are starting to make these reversal type patterns. Is it turnaround Tuesday? Is it just that the move was overdone? So the other thing I want to look at here, and this is one that I hadn't necessarily planned on, but this looks like a setup. And we look at where that resistance is, and we look at where the trend strength is here. If we come down and put our 25 line in here on the ADX, I mean, we're up in the 52 range on the ADX and gaining strength. So this trend is getting stronger. So, this is one way that we can approach this idea. I'm going to look for, and if you look at the symmetrical movement here, from a technical analysis perspective, right click, duplicate, put that right up on top there, and see where that resistance level is. It's just right around that area of that previous movement, kind of where we saw that little bit of a bounce and rally and pulling back and rallying up again. And if we were to double that, so what I'm going to do is I'm going to just do this. Let's duplicate that level right there. Whoops. Let's duplicate that one. We'll take it. We'll put it right up here. So if we get a big move, let's see where that resistance puts us. That puts us right under what was the previous support level. So I'm going to kind of take a moonshot here in terms of this based on technical analysis. So looking for the breakout. I mean, this is a typical type of technically informed bounce trade that we've been looking at. And again, not a recommendation, just simply one way to approach trading this in the shorter term, but that would be looking at this. And here's how we would set this up. So what I'm going to look at doing in this case is this. We'll maybe make this a little more complex. So I'm going to make this our entry into the trade. That's going to be target 1. And this is going to be target 2. So this is going to be our stop. So what we might do in putting this trade together is enter a position. Maybe we'll do 2 contracts in this case. Sell one of them if it gets to that first target, T1. Sell the other one if it gets up to T2. and create that order so that we can be a little bit more complex with this, which is fine. That allows us maybe to take some profit off the table, perhaps, as well as potentially let that trade run just a little bit. So what did we get? We got out on our /M2K. Before we get too far away from that, before I forget about it, /M2K, let's see what happened. Bing, we got to our target. It did what we expected it to do. So it does appear, at least, we're seeing some of that upward momentum. You can see how that trend strength started to pick up a little bit, and it took us out. So that was our that was our entry, our target, and it made that second move. We didn't change that that level here, but we looked at taking the trade off. We didn't change our labels in terms of that move. So it did what we expected it to do, which is good, right? So let's come back to /MBT, that Bitcoin trade, which just backed off a little bit here. But let's do this. Let's right click, and we're going to buy custom with OCO bracket. Now we're going to do something a little bit different here. We're going to add this as a first triggers. Let's do this. Let's do first triggers to OCO. And we're going to add, well, do we want first triggers to OCO? I'm going to add another OCO into this mix. And we're going to add another, this one. We're going to create duplicate order. Okay, so there's what we've got. We've got an OCO. So these are going to be to close. To close, to close, to close. That one's going to be to open. And we're going to do 2 contracts to get into the trade. And we're going to do 2 contracts to exit the trade on our stop. But we're going to do our target 1 and our target 2 in this trade. I'm going to make that good till canceled. I'm just going through and lining this out just so we can do this in an efficient manner. So let's kind of squish this over so that we can see those prices. So our entry is going to be a buy stop at 62,528. We'll call it 62,528. So stop 62,528. Wait, is that right? 62. No, I was wrong. 62,545. What was I getting to? 528. That's a little bit low. 528. No, we're still okay. 528 is okay. 62,528 is okay for that entry. We'll make that our entry. Our target 1 is going to be 63,083. So 63,083.00. And we're going to make that good till canceled. We're going to make our target 2 63,723. I like that symmetry there. So we're going to make that a limit sell at 63,723. And we're going to make that stop, in this case, 61,965. 61,965. 61,965.00. Minimum price increment is 5. Do we have not? Oh, I see why. Okay. So we've got to do 5s because it's a 5. Let's go 530. And let's go 8 5. And we'll go 5. And we'll go 23. We'll make that 25. There we go. All right. And time and force, we'll make that good till canceled as well. All right. So there we go. So Sam, bullish on /MBT on this reversal, gaining some trend strength. Not necessarily bullish long term, but bullish in the short term. in this trade. So what we've got in terms of this order is entry, stop for both, because we're closing out 2 if it goes down, closing out 1 if it goes up, and then 1 if it goes up even further. So we're going to go ahead and click on confirm and send, making sure those are 1 and 2 to get out, confirm and send. Read through this order to close, to close, to close. 5,000 initial margin, because 2 times that 1 contract initial margin cost to put in the trade. We're going to go ahead and put that in the futures group and click on send and fire that order off. And we just got filled. And did it just kick us out? All right. I'm going to digest that order. But that being said, yeah, that's right. Thank you, Barb. Or thank you, Brent. Yeah, exactly. Thank you, Brent, for lining that out. All right. So real quick, let's pop back over here and take a look. I'm going to pop back over to my futures grid and just kind of see what's going on. So /ES starting to pick up a little bit. NASDAQ starting to pick up a little bit. Russell 2000 starting to see a little bit of a turnaround. We're starting to see /MBT making that potential turnaround as well. We also looked at that bounce on /SIL and that possible bounce here as well. So let's pop over to our monitor tab, and I think I put my price in for my stop at the wrong place. Again, good reason to read the order. Read it twice, because we got stopped right out, and I think I'd put my stop in at the wrong place. So that was my fault in getting out of that. So we got into the trade and we got stopped out right away. But we're still in that /MNQ. It's doing what we'd expected it to do. The /M2K went the way that we wanted it to go as well in this particular case. Look, if you want more information about trading futures and trading futures at Charles Schwab, and there's some cool stuff coming up, potentially over the horizon here in the futures markets, expanded futures trading hours, single stock futures potentially, and other things. But keep up with that right here at schwab.com/futures. If you want to find out more information about any of these topics that we've talked about, come over here to the Trader Talks webcast page and search for those topics. All that we ask is you click on subscribe when you go to that webcast page, and give us a quick follow here if you want to learn more about how we place those orders. And then one other thing I wanted to tell you about is this, and this is coming up on Thursday this week, 7 to 8 p.m. Eastern time. It's going to be Jim Ferrioli, who I do the cryptocurrency basics webcast with on Mondays. Lizanne Saunders, who you have probably seen in our webcast series, Lizanne Live. Joe Mazzola, who usually hosts Lizanne Live. He's also the director of our coaching team. Cooper Howard from Fixed Income at Schwab Center for Financial Research, Chris Ferrioni, who's the head of equity research and strategy. So some great insights. And you can register for that if you go to schwab.com/coaching, and then you go to the live webcast schedule, and then you can find that registration page for the mid-year market update. It is a great resource. Guys, thanks very much for being here with me. Thanks, Brent, for helping out. And we'll see what happens with those trades. We'll be back here again next Tuesday talking futures. I'm going to be back later today teaching long options, so I will see you then. Take care, everybody. Bye-bye.